Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Alex Matthew. We're here to talk about the earnings of Nazara. And in fact, the snapshot shows that the revenues grew about 14% on year. Net profit came in at close to 21 crore rupees. The margin stood at 13%, but the devil is in the details. So let's get those details for you. We are joined by the management. As always, Nitish Mittersain, the founder and chief executive officer of the company, joining in. Nitish, thanks so much for taking the time. And as I always do with you, let's start with a broad overview from your end, and then we'll delve into the individual businesses. How would you characterize the first quarter results?
Yeah, I think it's been a stable quarter for us, Q1, as we wanted it to be. And it kind of sets the stage for us to, build on top of this for the coming quarters and, perform well for FY24. Overall, our gaming business has grown well. Our esports business grew 15%, but we actually deferred some launches into Q2 to take advantage of some of the popular games coming back to the Indian market. The only one that was muted for us was the AdTech business, where we are doing some work, but we're quite confident that it'll pick up again in Q3, Q4. So overall, we're pretty happy with what we did. Revenues of 254.4 crores and our EBITDA of 33 odd crores.
Okay, fantastic. So let's delve a little deeper, because I was also looking through a few reports. I was looking through your presentation, speaking about the fact that you've deferred a few of those events in the Nodwin business. Is that the primary reason why revenues declined on a sequential basis? You pointed out they grew quite substantially on year, but they could have been higher if it wasn't for this deferment. Why did you choose to defer?
Yeah, so I think sequentially, you will always see Q4 is much larger for us than Q1.
Sure.
So that's seasonality in our business, which is there every year. But you would expect a slightly faster growth in the Nodwin business, which got curtailed because we deferred these launches into Q2. One of our key titles last year was BGMS, part of which was accounted in Q1, that we had streamed on Star Sports. This time it's happening on starting August 4th, actually. On Star Sports, and we expect that to do very well. One of the reasons we deferred it was because BGMI just had made a comeback to the market, and we needed some time to put it all together and launch this tournament.
Understood. You spoke about the gaming business, and I see that there is margin expansion. The last time we spoke, also you pointed out that there is margin expansion in that business. It's growing the way that you're anticipating. But I see in Kidopia that there is a decline in the subscriber base. Why is that?
Like I mentioned earlier today, we had an issue with our advertising spends on the Google AdWords platform that we have. It was a technical issue which got resolved earlier in June. So I think Q2 should see a normalization of that. That said, I think Kidopia's revenues are up 10% year on year. And we still continue to think that this business can scale quite a bit. Right now, we're on the path of incremental quarterly growth in subscriber base and revenues. But we're also working on how do we really break out of this 310K subscriber kind of, kind of a plateau that we are currently in. And team has many ideas. Hopefully, we'll find a way to break out soon.
Okay. Speaking about the gaming business a little further, I see that you've achieved quite substantial margins in the quarter gone by. If I look at Animal Jam as well as Kidopia, is that primarily on account of cost rationalization in both of those businesses?
So in Kidopia, it's a bit magnified because of the drop in advertising spends.
Okay.
And I would say the normal margins would return to 22-23% instead of 28%. In Animal Jam, we've done a lot of work in the back end, optimized costs, optimized user acquisition costs. So I think this is a reflection of our general approach that we want to, make a strong foundation before we kind of launch into growth.
Okay. Speaking about the Nodwin business, you've already taken us through some of the highlights. And this deferment, I would assume you've said that it'll pick up Q2 onwards. You're going to play a little bit of catch up, and there is going to be strong growth in that segment as well. I'm curious about Wings, because you've made some additional spends, as I understand it, in that, and I'm trying to understand the potential as you see it for the gaming accessories segment. How large of a market do you think it'll be for you?
Sure. I think, with the youth taking on to gaming, in a big way, the market for gaming accessories will also grow very large, I believe. And I think there are opportunities for homegrown gaming accessory brands. It especially makes sense for us because we already have a large, gaming consumer base that we can upsell and cross sell these products to, and becomes an incremental monetization layer for us. We saw rapid growth last year, and we're expecting, very healthy growth this year. So we got on Shubman Gill as a brand ambassador. We've invested a bit more in marketing and branding in Q1 because Q2 and Q3 are the festive seasons which they kind of have the maximum sales. So we wanted to get ready for that.
But which products are you selling, and what are the various products that are being sold under the wings? Is it primarily audio sets, or is it more than just that?
Right now, it's primarily audio sets, but with low latency, audio sets that are great for gaming. And we're also now working on various partnerships with, various games. How do we kind of cross promote, etc., and add value to the customer who purchases it? But yeah, that's the core product right now.
Is the marketing spend therefore going to be a little elevated in the ongoing quarter as well? What's the plan there?
Yes, it will be. We will push the product to take advantage of the festive season, right? But some of the brand costs that we already kind of expensed out in Q1 will not get replicated.
Okay. In terms of share of business, is it still going to be small in the overall scheme of things?
For us, from an overall perspective, it's going to be a sub 10% contributor to revenues.
Fantastic. Talk to us about the ad tech business, and we spoke in the quarter gone by about that one client, which is, as you pointed out, low margin, but it's still having an impact on the top line for that business, and certain other technical aspects that you pointed out. That gets ironed out in the second quarter. What's the expectation for the rest of the year?
We've acquired many new customers in the last few quarters, but as any new customer you acquire, they take some time to cultivate and start increasing their spends. So we're starting to see that happen. I think you will see good results of that in Q3, Q4. In terms of EBITDA, we've also seen increased costs in terms of our products business, which is a more higher margin business, and we expect that to again contribute. So I think overall on the ad tech side, Q3, Q4 is where you should see an up move.
Okay. Now, if I again zoom out in conversations past, and in fact, you spoke to Neeraj not too long back, I understand that you do give guidance in September, but with Q1 behind us and certain other aspects that you've clarified that will play out Q2 onwards, and taking from what you've said after Q4, where you said that your gaming business, your ad tech business, you will look to kind of push the margins a little bit, not so much. You will focus on growth there. From that perspective, on the overall basis, where do we see margins going? And because I also remember that you said in that interview with Neeraj that this year the focus will also be on pushing margins a little more than you have in the past.
Absolutely. So I think what I can share with you is, our objective and plan for the year is to post margins, overall margins for the year that are better than the previous year. So we are incrementally increasing our margins across our businesses. We believe that will help also strengthen the foundation on which these businesses are built. At the same time, we don't want to overdo it because continuing to grow strategically in businesses like our esports business, some of the gaming IPs that we have, acquired, or even the ad tech business is important for us. And I think playing the balanced game so that we can have a even better FY25 is something we are very focused on.
Okay. I haven't yet asked you about gamified or rather real money gaming because, you kind of spoke about it when the news broke. But from a business point of view, you've had a little time to now review strategy and all of that. Would you say that plans for expansion are completely on hold right now? And where will that additional 5% of the business, assuming that it doesn't grow from this point, or you put it on the back burner and things go as they are right now, where does that growth come from?
Sure. So I think obviously we evaluated various options based on how things may pan out. The 2nd August we have another meeting of the council which will give further clarity on how this is going to be implemented. And that will kind of directionally set us on what we need to do. Depending on the outcome, I think there could be a large to medium impact in the short run in our RMG business, and similarly to the most players in the market. However, I think also one thing that has happened is the clarity would have emerged, whether to the liking of the industry or not, it would have emerged. And I think opportunities will emerge out of that as well. So I think short term, we are kind of going to mitigate impact on ourselves. In the short to medium term, we are going to look very actively on what are the opportunities being thrown up in this sector, now that regulatory and taxation clarity is there, and how can we benefit from it.
So, just to follow up on that then, because as I understand it, if things are retained as they are expected, or rather as they were promulgated, if you can call it that,
Yes.
it's difficult to make money in this business for you as well. So, what opportunities do you see right now?
I don't want to preempt the August 2nd meeting, but our expectation is, or our hope is, that things will, be a little better than what they were stated in the initial meeting. And like I said, there are 3 or 4 different scenarios that may play out. So perhaps it would make sense for us to talk again once that happens.
I'll hold you to that, Nitish. I'll hold you to that, and we'll speak soon enough then. It's been an absolute pleasure speaking with you. And as always, thank you so much for speaking to BQ Prime.
Thank you. Take care.
All right, viewers, there you have it. Management of Nazara. He promised that we will speak sooner rather than later as we get some more clarity on that real money gaming piece with regard to the taxation angle. For now, stay tuned. Lots more coming up on BQ Prime.